Good morning and welcome to the Killik and Co market update. This week, a fairly major reshuffle of the Dow Jones index has been announced. The Dow Jones is one of the most popular stock indices in the world, but it is a little bit unusual in how it is calculated. Whereas indices like the FTSE 100 and the S&P 500 contain the biggest 100 or 500 companies on their respective stock exchanges, the Dow Jones contains just 30 companies, and these are selected by a committee. And the selection of companies is intended to represent the US economy. Now, it's been announced that 3 companies are coming out of the Dow and 3 are moving in. And bearing in mind that there are only 30 companies in the index, having 3 new ones joining really does represent quite a major change. And it does imply that the US economy has undergone a fairly major change because of the coronavirus and the associated lockdown. So let's have a look at the companies that are leaving and joining the Dow. First up, the companies that are joining. First of all, we've got Salesforce, which is a cloud computing software company that helps other companies to store and to analyze their customer data. We've then got Amgen, which is a biotechnology company focused on drug discovery. And finally, we have Honeywell, which is a leader in the industrial sector with a particular focus on industrial automation and data analytics. And then for the companies coming out, the first one is ExxonMobil, which really is quite a surprise because Exxon is the biggest oil company in the United States. So the fact that this is coming out of the index does imply that the country is moving away from fossil fuels. We've then got Pfizer, which is a traditional pharmaceutical company, and finally Raytheon Technologies, which is exposed to aerospace and defence, and it does have exposure to commercial and to business aviation, which are 2 areas that have been hit quite hard by this lockdown situation. So those are all the changes that are happening within the Dow Jones. As I said, it does represent a fairly major change to the US economy, but these changes do imply that the economy is fast moving towards a time when automation and data analytics are becoming increasingly important. We've just talked about Salesforce joining the Dow Jones, but it just so happens that this week Salesforce published some results that were really far ahead of market expectations. In fact, on the day that these results were published, the share price went up so much that the company gained $50 billion in market capitalization in that one day alone. If you have a look at this share price chart here, you can see what a successful few years it has been for Salesforce. Salesforce is the leading customer relationship management or CRM operator in the world, and it helps companies to store and to understand and to analyze their own customer data. What are their customers buying? How often? How do they pay? What kind of offers do they respond well to? And knowing and understanding all of this data better helps those companies to serve and to market to their own customers. Salesforce operates through the cloud via a software as a service setup, and that means it has a very high level of recurring revenue. And in fact, the second quarter of this year was the first quarter in which Salesforce achieved over $5 billion in recurring revenue. The company has been one of the big winners from the lockdown situation, as more companies have tried to operate online and they've also tried to become more efficient. And Salesforce, in its last set of results, predicted that its own addressable market is growing by over 14% per year. So it really does seem as though the opportunity will continue to be quite attractive with this company. So please do give us a call if you would like to hear more about our thoughts on Salesforce. And finally, Shinzo Abe, the Prime Minister of Japan, has announced that he will be stepping down due to ill health. Abe has become known for his so-called 3 arrows of economic policy, which he devised to try and bring Japan out of a period of very low growth and very low inflation. The first of the arrows was monetary policy. Interest rates were reduced to very low levels in the hope that this would discourage people from saving and encourage them to go out and spend. There was also a huge program of quantitative easing which further lowered borrowing costs, and it was hoped that companies would take advantage of this to go out and acquire businesses or expand and do things that would otherwise boost the economy. The second arrow was fiscal policy. The government borrowed huge amounts of money for fiscal expenditure, for example, spending on infrastructure, and it was hoped that this too would boost the economy. The third arrow is still very much a work in progress, and this is cultural or structural change. Companies in Japan have historically been very cautious in relation to other companies all around the world, and Japanese companies tend to sit on huge piles of cash, and this cultural change was intended to encourage some of these companies to go and spend that cash on things that could boost the economy. Let's have a look at a chart of the Japanese stock index, the Nikkei 225, over the last 10 years. And you can see that there was quite an increase in the stock markets around about 2013, which was when these 3 areas of economic policy were first announced. But over the last few years, the stock market has been relatively flat. So people will be watching very closely to see who Abe will select as his successor. Moving on to have a look at next week. It's a 4-day week here in the UK, but we have got results out from Zoom Video Communications and also from Barrett Developments. That's it from us. Enjoy the bank holiday and we'll see you next Friday.